What is going on, YouTube, and welcome back to another ClearCryptos educational video. My name is T Hobbs from the Crypto Shop, and of course, you know I brought my man Jay Seals with me. How you doing, brother?
I'm good. What's up? What's up?
Hey, on this particular video, we are going to be discussing some things that can help you move forward in your trading strategy. This particular video, we're going to be covering moving average, convergence, divergence, better known as MACD. Now, while using the MACD, there are multiple different indicators you can use to help you out in your trading strategy. We want to show you how each particular indicator works individually, and then you can put them all together and use them to better help your trading strategy with entries and exits. So without further ado, Justin, please give us an intro on the MACD.
Okay, thanks so much for throwing it this way. So like T-Hob said, we're looking at the moving average, convergence, divergence, aka the MACD. So let's look at the definition really fast on Investopedia. The definition is the moving average, convergence, divergence, MACD, is a trend following momentum indicator that shows the relationship between two moving averages of a security's price or crypto's price. The MACD is calculated by subtracting the 26-period exponential moving average, aka the EMA, from the 12-period EMA. So if you don't know what EMAs are, don't worry about it. We're going to be making another video breaking down exactly what EMAs are, and you'll see it on the chart when I throw it back to T-Hobbs. But essentially, all this is saying is that we're going to look at an indicator that's going to show us what direction the stock or crypto is moving in, and it's going to show it through a cross up between the 26 EMA and the 12 EMA. It's got some nice bars on there that show you the when it's green, it's bullish, meaning the crypto's going up. When it's red, it's bearish, meaning the crypto's going down. So basically, you can use it to make your trading decisions. But I don't want to get too far ahead of myself because, like I said, T-Hobbs is going to show us on the chart. So go ahead, T-Hobbs, show us what it looks like on the chart.
Hey, thank you so much, man. Now, so what I'm going to do is I'm going to switch to my screen over here. And what I have here is just a blank canvas for the Solana cryptocurrency. Now, if you've never used the MACD before, I'm going to break down exactly how to get to it. So up here, you'll see the name of the actual cryptocurrency, Solana. You'll see the time frames. I'm currently in the 5-minute using the hollow candle formation. Now, what you want to do is you want to scroll over here. The next bar is going to be indicators. So all you're going to do is click on indicators right here. You're going to go down to technicals. And when you get to technicals, you want to make sure it's on the indicator tab. Sometimes you'll open this and it'll be on strategies, volume profile. You don't want that. You want indicators. What you'll do is you'll type in MACD for MACD, and you'll see that you'll get the moving average, convergence, divergence, right? You'll click on that and instantly TradingView adds the moving average, convergence, divergence, i.e. the MACD, or AKA the MACD, all right? What you'll see here is you'll have MACD 12, 26, close 9 EMA. What that means is it's the 12 EMA, the 26 EMA, and it's kind of like smooth it out by using the 9 EMA pattern. Doesn't mean the 9 EMA is on here, but it helps smooth out the chart by going and following the 9 EMA pattern. So they have the 12 and the 26 moving average officially here. Now, how do you read this? Well, I'm going to show you, but at first I'm going to put some arrows in here to kind of help us move along. So remember, the name is moving average, convergence, divergence. All right. So what you want to see is a convergence. So I'm going to use my arrow here. Convergence goes up, right? And then I'm going to click my arrow here, and then you want to see a divergence, right? I'm going to move this arrow. I'm going to make this arrow red. Okay. I'm going to change this one to green just because I feel like green is the way to go when you're trying to go up. Now, what you'll see as I move those arrows, right? What you'll start to see is you'll see a crossover in the moving average, or the MACD. And I'm going to represent that crossover with a circle. All right. So what you'll see here, sorry, I was on the wrong one. So what you'll see is as the stock starts to move up, i.e. converge, right? As the stock starts to move up or trend upward, you'll start to see a crossover right here. See? As you see this crossover, right? What you'll see is the 13, I mean not the 13, but the 12 EMA, the blue line right here, right? The 12 EMA crosses over this red orange line, which is the 26 EMA. As the 12 crosses over the 26, you'll also see it kind of follows the pattern. You see my cursor up there, it follows the pattern of the stock. So as the stock dips here, the 12 dips. As the stock rises back above, the 12 rises back above. Now you'll start to see a divergence, meaning the 12 diverges from the actual stock, right? The 12 EMA crosses back below right here, and then I'll indicate that with a circle as well, right here. So the 12 EMA crosses back below, indicating a downtrend is incoming. As this downtrend comes, you'll see it starts to downtrend here. Sometimes it kind of reverses back up right here. And then it starts to move further and further and further down as you follow this arrow down. Now, as long as this blue line, the 12 EMA, is below this red line, the 26 EMA, then the theory is, using the MACD, you can say that the stock will remain bearish. This is a bearish signal. Same thing applies here. As long as the blue line is above the red line, you can call this a bullish signal. Now, one thing to note, the further away these lines are, the more bullish or bearish this particular movement becomes. I.e., as you can see here, we just started to cross over right here. It was a very bullish signal, so we got the cross. And as you see, the lines start to spread, or the mouth is what we kind of indicated as. The mouth starts to get wider and wider as we get to the peak of this movement. Then we had a little dip, so the lines got a little closer together. And then again, they got really wide, which we created an actual double top right here, which we'll cover in another video. But as the lines got closer and closer together, you can see the downtrend starting here, and the lines cross to the downside, coming all the way down here. And again, it just continues that pattern. I'm not going to continue to draw a bunch of lines, but as we consolidate though, you'll see that the lines just kind of stay together. They don't officially cross until we get a little bit of an uptrend. And notice how they're not that far away from each other because the movement isn't that strong. But as you go to here, they get further and further away from each other because the movement becomes stronger and stronger. And then they get close because the movement is starting to become bearish. And now they're wide because the movement is down further and further. Now, other things to note with the MACD is the volume profile that it represents here. Now, as you'll see on the MACD, the volume profile is represented here with these green lines, these green bars, and the red bars. Notice how the green bars, as the stock moves up in its uptrend, they start small and they are really, really dark in the midst of the uptrend. The darker the green bars, the more volume, i.e. the more time you have to stay in the play. As the bars start to hit the peak, they start becoming a different color. They're letting you know that the volume is starting to decrease and you could potentially remove yourself from that particular play. They go down further and further. Again, they become solid green, but they're smaller, meaning the volume is decreased, but there's still an upward movement pressure, still bullish. That's why we have this reversal back to the upside. Same thing applies on the red side for the bearish candles. The bearish volume bars are the more red and the larger they are, the more bearish they become. As they become lighter, the more chances of the stock or the cryptocurrency moving to the bullish side. As you can see here, this is the peak of the red volume bars. That's very, very similar to what we see here. The biggest red candle of this movement, the lowest low is right here. Hence the reason why we have a lot of selling pressure here. As the selling pressure subsides, the color profile changes on the volume bars. Again, selling pressure increases here, so the volume profile red bars increase as well. And then they get lighter as the consolidation comes, and then it just kind of switches over there forth and so on. So again, that's the MACD basically in a nutshell. It doesn't take long to be able to use this, but you can use this mixed with other indicators to indicate when you want to enter, exit into a stock or a cryptocurrency. So Justin, you got anything to that?
Yeah, so one thing too that you want to remember is that when you go to higher time frames, you're going to see less crosses, and you're going to see a lot wider candlestick bars at the bottom, as well as wider EMA convergences and divergences. Just because of the longer time frames, you're going to get longer movements, right? So if you go back into like the August-September time frame on Solana, you can see just how long we stayed in that uptrend in that time period because of how far away the two EMAs actually were. If you go to a shorter time frame like the 1 minute, then you're going to see a lot more crosses, and it's going to be a lot more hectic, a lot more crazy. Actually, it doesn't even show on this particular one, but there are ones that will show. I think just because they're really small, they're there, but they're smaller. But it gets very, very crazy. There it is. So you'll see way more crosses happen the smaller time frame you go. So just remember that with the MACD and with a lot of other indicators, when you go out to higher time frames, they're normally a lot more reliable than if you're playing on a shorter time frame.
Sorry, I was playing around with the monthly time frame. I absolutely never use that. But yeah, so that is pretty much the MACD in a nutshell. And like I said, we just wanted to take the opportunity to explain to you guys in thorough detail exactly how the MACD works. Now, I fully expect you to understand that one thing you should take away from this video is the MACD is not the end all say all. MACD is another indicator that you can add to your trading style and mix with other indicators. It is a very reliable source. Okay. That being said, that's pretty much all we have for the MACD. My name is T Hobbs from the Crypto Shop. That man above me is Jay Seal, and we'll catch you guys on the next ClearCryptos education video. Please remember to like and subscribe. Peace.